Welcome back to the program. Let's get back to where we finished off earlier before the break. UBA, of course, reported overnight that is $500 million Eurobond was successful on a massive level, 240% oversubscription. That dollar-denominated bond will now be listed on the Irish Stock Exchange to help this commercial lender expand its Pan-African footprint. UBA operates in 14 African countries, more than 1,000 outlets across those regions with headquarters in downtown Lagos. So you're looking at that stock chart from Stockman Nigeria. Look at the UBA year-to-date, 100% in terms of share price. Last session, yesterday, in the green, 1.8%. Week to date, 7.14%. Month to date, 20%. That's from the 1st of June till yesterday, 20%. 52 weeks high, 108.33. And it says it's an improved Fitch ratings, according to a statement issued by UBA yesterday. Fitch gave a B rating to the new bond, stable outlook, while the S&P, that's the Standard & Poor's, gave this bond also a B rating, also with a much stable outlook. That bond, $500 million will mature June 22nd, 22. June 2022, beg your pardon. That's about 5 years from now. With a coupon of 7.75% and an effective yield of 7.875%, tracking Nigeria's €1 billion Eurobond that we floated as a sovereign in February. And you can see the picture there for UBA. Let's talk about the FX market. Yesterday, the financial regulator threw more than $400 million into the FX market. Of course, as usual, putting different amounts in different baskets, whether the invisibles, the wholesale, the retail, the SMEs window. And so we had about $413.5 million. How did the market finish off? On the spot market via the FMDQ, OTC platform, Naira dollar, 305.65, Naira pound, 397.64. In the green for the Naira. Another green for the local unit, and the euro 351.86. Look at the street market where the Naira dollar was unchanged at 367. But the Naira made those gains 0.64%, 0.73% against the pound and the euro. At the investors and exporters window, that was a gain of 0.45% for the Naira, 373.25. Yesterday, total turnover in the INE windows you're looking at was $133.90 million. Just click on the FMDQ OTC platform and you can see the figure there. That's quite significantly higher than last Friday's figure, about $78.8 million in total transactions. Let's take that away and get into the big 7 oil majors listed on our markets. And look at yesterday, a bit of a comeback there. Investors took some profit on these big 7. In particular, 40 oil, 64.14, down by 0.25%, 2.568 million shares on the day that 40 oil, this integrated energy trader says is seeking another 20 billion, says the 9 billion naira it floated bond listed on the FMDQ OTC Securities Exchange has been used to improve the liquidity of the energy trader. A bit of information there from this company. 40 oil was in red. Let's take that away and go to the next page. Owando followed the rest of his colleagues in the red territory, 2.63% haircut. Seplat lost about 0.5%, and Total, the deepest cut, 3.9%. So that, in summary, if you add the smaller caps in that space, that sector was 1.1% in the red. But year-to-date, still very nicely, 15.1%, just tracking the broader market about 22%. Dividend yield, 1.8. What's in the news as far as the Nigerian energy market is concerned? The National Petroleum Corporation, or the NNPC, on Monday released its first quarter 2017 performance report showing a loss of 33.9 billion in the first 3 months of 2017, January to March. That's the third straight monthly loss by the State Oil Corporation. The company says crude oil production trimmed from 1.84 million barrels per day in January to 1.82 million barrels per day in the month of February. A PPMC, that's the pipeline, product and pipeline marketing company, posted the highest loss of 52 billion naira. We have a fair idea where that happened. That's the subsidiary of the NNPC responsible for petrol imports in bet with the PPPI, but the few subsidiaries making profit as far as the NNPC is concerned are those three subsidiaries. What is that? Okay, let's flip it over, folks. Okay, I got it. Okay, so you have the NNDC, Integrated Data Services, and Netco. Those are three subsidiaries that made profit. As far as the refineries is concerned, Port Harcourt Refinery is in profit, made profit of 12.04 billion, a very surprising money. Kaduna Refinery is still making losses, 2.42 billion in the first 3 months of the year. Warri Refinery and Petrochemicals Facility posted 3.39 billion naira loss. That's as far as petroleum is concerned. Let's go into the electricity market. And this was a riot act that the regulator, NERC, read to the discos yesterday. In part, this is what it says. I put it out on the screen. It says, quote, a lot of discos, that's the power distribution companies, have not done well in metering. And we're looking at very heavy sanctions, including calling off the boards of some discos and replacing the boards. Because NERC has a right, just like the Central Bank of Nigeria does, to the banks to sack the boards and put in new boards of directors. That's quoting the head of engineering performance of the Nigeria Electricity Regulatory Commission, NERC, Professor Frank Okafor, says they are disappointed at the NERC with the discos, and they may sack the board of directors and replace them. So they're going to invoke similar powers that are held by the Central Bank of Nigeria, because they are not metering Nigerians, and we have what they call the crazy bills. That's the riot act. We're waiting to see if that will come in practical terms. What else is there? We spoke about 41, haven't we? The big cap is looking for additional 20 billion naira in capital raising after it did about 9 billion